Everybody, happy Monday. Hope you all had a great weekend. Welcome back to PreMarket Prep. I'm Spencer. I got Joel. I got Dennis. We got a lot to talk about. Yeah, Friday was a pretty crazy day, right? We'll talk about that reversal. The last hour and a half-ish of the day, straight up, right? Or that way, right? That way, straight up and to the right. Big reversal for a lot of stocks. This week is a big week. We have a lot of earnings reports. Chinese markets are closed, so the overnight market will be a little quieter in that regard. But we got a lot to talk about on our end. And that's the story of the day. Tim Quast is our guest. Hit that like button, and let's roll that intro, whoever is in charge here.
This is Pre-Market Prep with Joel Elconin, Dennis Dick, and Spencer Israel.
Bring the gang on now. Gang, you're all here. Good morning.
Yo.
How was everyone's weekend?
Oh, man, I had the busiest weekend. I almost had to take today off. I had such a busy weekend.
Me too, Ed. Well, just
Dennis, you're going to be so jealous. It's
What?
probably
What
more than you had. My daughter's over for dinner on Friday. Okay, got a swim in Saturday. Had my buddy over for Michigan basketball game. Made my famous Georgia Rubens, which wasn't too good. The game wasn't good. My Georgia Rubens were great. I saw a play at the Fisher on Saturday night.
Oh, it's like normal life for you.
Yeah, I swam again on Sunday, and then we had another friend over for brunch on Sunday, and we went to a new exhibit at the Holocaust Memorial Museum.
Holy mackerel!
Yeah.
Doing everything.
Yeah, just whatever. Just not sitting on my fat ASS anymore, getting out and doing stuff. So,
Well, the good news is for us in Ontario, we're doing a half reopening today. So restaurants are actually opening at half capacity.
yeah.
Movie theaters are opening at half capacity. Schools went back 2 weeks ago. So we're getting somewhat back to normal. We're not where you guys are, but at least we're allowed to do some stuff. Maybe the trucker rally is working, but actually all this stuff was already planned. So I guess it's not working. This was already planned. So we got a half reopening in Ontario.
all right. I guess a half is better than nothing.
All right, let's run down to big board. Let's run down.
Joel, you got to bring up your charts first.
I thought I did share. I hit the share and I didn't hit the.
We have this
fun to
conversation
share
every day.
Yeah, well, it's
Every
Monday.
Monday blues.
I mean, we're down 16 and a quarter, 16 handles, 07 and a quarter, but man, I think that's good after the rally
Really
that we
good.
had. Yeah, I mean, after the rally we had on Friday, not giving a ton back yet,
Yeah.
near the top of last week's high. We got
Yeah.
a lot to prove this week. Crude up 45 cents at 87.27 or 87.28. Gold up 580, 17.92.40. Silver up negligible, 29 cents, 22.59. Your Bitcoin futures, they're down 735 at 37,055. Ethereum, it's going the opposite way. It's up $21 at 25.33.
I'm back.
You're back in your Ethereum. And I kind of think, Apple saved a day, right? On Friday, if we want to break it
I
down
think
into one
so.
stock.
Yeah, I think so, because you know what? It held on. It was holding on to its gains. The market was cratering and really getting hit off the open. It looked like, and it had me fooled too. Usually I'm pretty good at feeling this thing. I had it wrong. I thought when we were right near that bottom of the range, I thought we were going to take it out and test the low of the move. We did not do that. Apple would not go down, and the tech stocks were holding on. And then all of a sudden, they just started buying all the Kathy names again. They started buying the beaten down tech names. I mean, maybe Robinhood led this charge too. We can give a lot of credit to Apple, but Robinhood was a huge reversal off the open. Snuck under 10. We talked about that. Hit the stops under 10. And then it turned around and they would not stop buying it all day. So, I mean, props to Robinhood, props to Apple. That was probably the start and the help that, maybe the market needed to kickstart it. But we're still range bound here, Joel. So not out of the woods. We're still in the woods. We're in the thick of it. We're just in a range.
And also I'll look at things on on the S&P basis, but look at your stocks, look at your highs from Friday, for the week. I'm sure a lot of those highs were made on Monday. Look where you closed on Friday. There's a lot of juice on Friday. So if we're following script and we're tanking, we're going to hell in a handbasket, we're going to 3,800. Then we're going to fail up here, and we're going to fail miserably, and we're going to take out that low from last week. On the other hand, how many weeks did they grind you? You got a couple big earnings, still some big earnings coming, and then you got the jobs numbers. So it could be one of those weeks where you got to wait for the real big action on Friday, right, with the jobs number.
Yeah, I mean, every economic data point now, it seems like as much as they didn't matter 6 months ago, they all matter now. So those are moving, and the jobs has always been the big one that moves markets too. So, but we have so much fundamental information coming out this week. We're going into the heart of earnings season. Reporting this week, we got Google, we got AMD, we got PayPal, we got Facebook. We got Alibaba reporting. We got Amazon. We got Snapchat, which actually Snapchat seemed to move the market the last time it reported. So don't shrug off Snapchat. And then there's just a pile of other tech stocks reporting too. And then, you've got a lot of cyclicals reporting. UPS is going to report. Exxon Mobil's coming on Tuesday. I mean, there's so many earnings. There it is. There are so many earnings reports coming this week. That's going to be a driver as well. So you have all fundamental drivers. That's why the technicals are just because it keeps giving more information. So how are the earnings? That's going to be the first question. How is the jobs on Friday? That's going to be a huge question towards the end of the week. How are traders positioning going into all this stuff? That's always the question. So, I mean, this market is very, very hard to predict when you've got this much fundamental information coming at it.
And now you have a bunch of economists out there, and not only is the Fed raising, they weren't fighting inflation. Now they're going to fight it too much, and we're going into a recession.
This is Barron's, eh?
Yeah. Yep. I'm sorry, Spence. What were you going to say?
No, what I was going to say, just on the earnings front, I don't. To be frank, I'm not even sure how much that matters right now, because I saw this tweet this morning, and the tweet was from Zero Hedge, but it reads like a tweet that they got from FactSet. Of the 169 S&P 500 companies that have posted Q4 earnings results thus far, 81% have met or beat the expectations, and profits have come 5% above the consensus estimate. So the earnings have been good.
Yeah.
Where does that leave us? Bupkis.
It's uncertainty going forward. I mean, and again, you'll have there's economists on Barron's, there's economists on CNBC. They're all over the place. There's analysts giving their S&P targets for the end of the year. They're throwing darts, man. They can do whatever analysis you want. I'll tell you right now, the only thing I know is that none of these guys or girls know what they're talking about, or how to predict this market a year from now. This market is hard to predict 5 minutes from now. Like, that's my job as a day trader, is predict the market 5 minutes from now, or 10 minutes from now, maybe even an hour from now. But there's never anybody can predict it a year from now. It's just bullshit. And that's what it is. But I mean, in this market, it's hard to predict 5 minutes from now. Give me a break trying to predict it out 5 weeks or 5 months or 5 years. That's nonsense. In 5 years, maybe you think it's going to be higher. But, these year-end price targets that they all come up with, they're crunching their numbers. Give me a break.
My favorite thing to do, one of my favorite things to do, is to go back and look at the year-end price targets back from January and see how they compare to the actual
There's always going to be some people that got it right, because there's 10,000 people trying to predict it. So you can always cherry pick, this person got it right and this person got it right. Let's bring them on CNBC because they were right. Yeah. Oh, they were the lucky ones that won the lottery and got it right. Were they smart or were they lucky? It's very, very, very hard to predict. The market it's always been hard to predict. It's why I focus more on market inefficiencies as opposed to trying to predict directional movements. It's hard. It's fun to predict directional movements, and sometimes we're right, sometimes we're wrong. But the bread and butter, for me, and especially everybody at Bright Trading, is made from market inefficiencies, inefficient pricing, when, it's little things get out to lunch. But we've talked about that, and obviously, and we've done a couple educational segments on it before. But, it's difficult to predict the market.
Did you see that guy that had a 29,000 to 1 parlay this weekend? Predicting the scores of both the
Oh
NFC. Yeah.
$20 to what, half a mil or something like that?
Yeah.
Yeah.
Yep. He predicted
Wow.
he predicted the exact scores of both games. That yep.
For him.
29,000 to 1. We'll have to get him on. But
Yeah, get him on.
No, I mean look, so we're at this point where, so this is the last day of the month. So
Yeah.
True. Yep.
you're
Good point.
you're gonna see a lot of stats and tweets and commentary today about this being the worst month in the market since March of 2020, which it will be. The S&P.
You never know.
Well, okay, you're right. You're
Gotta
right.
turn around, make
You're
new
right,
highs.
You're right. You don't know. I retract that statement. The S&P 500 is down about 7% this month. The Qs are down. The Qs and the Russell are both down more than that, I think, last I checked. So, yeah, I mean, that's kind of where we're at. I'm sort of in this camp. I'm repeating myself every day, but I'm in this camp of chop fest until proven otherwise. But
it's what is being proven every single day.
Yeah. So
the only thing is that's been working is fading everything. Fading everything, fading the rallies, fading the dips, just, and we're in a range here. So I guess you just continue to do that until it doesn't work. But if you're chasing moves, that's the one recipe that has been losing you money for a long time now. Chasing just has not worked here for a long time.
Yeah. Everyone in the chat is saying I look extra pale today. Is it because the lights are off? I'm not quite sure. I mean, I don't.
Well, I hope you're not getting COVID for the third time.
Whoa!
Oh yeah, only once.
I only had one.
Third.
I only had one.
Only once.
Let's be clear about
only once.
No, no, I'm not. I don't know why.
You know what? We got a rare occurrence going on here today, guys.
What? Oh, we're all wearing the same color.
Yeah, we're all wearing blue shirts. I mean, Dennis wore that blue shirt all week.
Blue.
Yeah, last week.
I'm kind of blue over the whole Stafford and the Super Bowl thing too.
You're blue.
You know what it is? It's just because why, us as Lions fans, nothing good can ever happen for us. I mean, we've had Stafford, and now he was always good. I guess we just didn't have the team around him, but it's just like he's gone,
another good
and then all of a sudden they're in the Super Bowl, and it's like, well, nothing good will ever happen for the Lions.
Okay.
Well, what's the light at the end of the tunnel if you're a Lions fan? Really?
You moved to LA. That's the light at the tunnel.
Maybe we should just switch. Maybe we should all jump on a lot of Lions fans have jumped on the Stafford bandwagon. I'm like one of those fans that's kind of, I can't just follow, just because he was on your team for a long time. I just can't cheer for him now because he's on another team. Can you cheer for players, Joel, when they, when they go to another team and then you cheer them on? I always just, I can't do it.
Yeah,
I just cheer for Michigan players wherever they're at.
You're still cheer for the Michigan players. Yeah.
All right, I'm going to bring it back to the
maybe
market.
I'm a poor sport. Maybe that's what it is.
I'm going to bring it back to the market here. We do have yes, you had this broad-based rally on Friday, so everything is kind of trading higher, right? But you do have a couple of interesting calls today being made.
Okay, that's what we like.
On mega cap, you have Netflix catching an upgrade at Citigroup to buy, and Tesla catching an upgrade from Credit Suisse. I believe that's also to buy. Two beaten down stocks getting buy the dip upgrades this morning from bulge bracket banks. Credit Suisse and Citi are nothing to sneeze at there.
Well, lots of thoughts on Netflix. Obviously, I put a starter position on it 4 days ago. Ackman followed. Obviously, obviously listens to PreMarket Prep. He's like, oh, then he's getting in, I'm getting in. But Reed Hastings on Friday night actually bought a pile of stocks too. So I haven't seen Hastings buy Netflix.
Reed Hastings definitely bought the dip last week.
He did. He did actually. Hastings. And when's the last time Hastings bought stock? Can we find that in the Pro?
Oh, the last time.
It's been a while. Maybe it's an unselected perception on my part, but I have not noticed Hastings buying in a long, long time. So we have Hastings, and it wasn't a nothing position. He bought another 51,000 shares. Obviously, he owns a pile of stock. So, it's a drop in the bucket, but it's the vote of confidence still too. That's $20 million worth of Netflix that he bought.
He bought a few shares in December.
Did he?
Yeah, he bought some stuff in December. He bought what's the
Normally you see the CEOs that are always selling, and here's one that's buying.
No, he bought a pretty good amount of shares in December. Prior to that, what did he do? Yeah, he bought some more in September. So okay, he does some intermittent buying.
He does some buying.
Yeah.
I don't think that hurt because it was trading up late Friday night after that report came out, and then obviously now you get the Citigroup. Is Citigroup upgrading this morning?
Yes.
I think it breaks out through 400 here today. But you got major resistance point is at 409. That was the high on the day that we gapped down on the bad earnings report. So I think that's where it probably struggles. I'm holding on to my shares. I put them in the long-term account. I'm sticking with, the partial position in Netflix because it actually has gotten to a point where it's getting almost into value area. I didn't load up, but I was like, it's not expensive anymore. And honestly, I just think
not super expensive.
It's not super expensive. It's not super cheap, but it's not super expensive. And I just don't think that, like I always said, competition's coming for Netflix, and it is. But the competition has really failed, in my opinion, to dethrone Netflix. And it's looking like it. And Netflix keeps coming out with blockbuster stuff, too. So I feel like they're still going to be best of breed in streaming for a long, long time. Stock's been cut in half. Streaming isn't going away. If the market ever does, start to make new all-time highs again, I think Netflix is going to be one that really helps out. So that's why I started a position in it.
Looks like we're bid up here near the highs of the pre-market session. Pre-market high 97.48, traded 96.75. So you just want to barrel through there, right? And then Dennis I'll give you an intermediate number before. Holding 94.80 was important. That was Thursday's high. But that's it. I mean, you get up, you test that gap. You get into that gap. I mean, it would not be unreasonable to see this thing fill the gap over a long time, over the course of time. And also, now that, the market structure's changed here a little bit. There was a good period of time where, if you wanted to buy this thing, you just put your bid out there, then you were just getting hit. That happened the earnings. It happened to earnings day, and then it happened the following day. And now it's, now if you want to own it, if you want to cover a short, the market, now you're buying into an up market. So 409.15, that's a good target for it. I just wanted to check, who was the guy that was going nuts buying his stock?
That's Asana, Joel.
Yeah.
He
buys nonstop.
Dustin Moskowitz. I don't think I've never.
He's just really rich, right, Spencer?
Well, he was at Facebook like day one. He was like day one Facebook. So yeah,
he bought another 1.25 million shares.
Yeah, I don't know if I've seen a CEO buy stock more aggressively than Dustin Moskowitz of Asana. It's kind of impressive.
Go through all the buys. It's all the time. It's multiple times a month. He's buying like serious shares of his company. I like to see that,
this is how easy it is to look it up in the Pro.
Yeah, do it. Show us.
All I did was I went to a news feed that I have where I have just SEC filings in there. Well, I also have press releases, and I searched for Asana, like the ticker, and then I searched Moskowitz because that's his last name, right? And then boom, look at all these insider buys.
He just keeps buying.
Buys. But look, this is just this year or the last couple of months. If you go back to last summer.
Does he do any press, Spencer? Does he ever come on and shows or anything?
I haven't seen him do press. I mean, we can certainly reach out to him.
Yeah, why don't you write one of your nice emails?
One of my nice emails.
Or maybe have
Don't you love seeing the CEO just loading up his company though? Like, I mean, there's so many that are just dumping stock, like the AMC CEO who, I gotta have a retirement plan and get, now you're licking your chops at watching your price of your stock going to $35 and $33. Like, I never thought I could get this kind of money, and he's banking coin. And here you have somebody that's giving the company a continuous vote of confidence, putting his money where his mouth is. Maybe he's wrong. He's been wrong because he's been buying the dip nonstop. But I like seeing that a lot better than these CEOs that just come and dump.
He's been buying. He bought on the way up, and now he's buying on the way down.
Never stops buying it.
Never stops buying.
He believes
So,
in his company.
more,
Good
yeah,
for
more,
him.
more power to him. Real fast, does anyone here? Did anyone here watch Ozark yet? The new season.
No, and say nothing.
Okay.
Because it's I might try to like do it all in one shot, with my wife's and this week or something, find a stay up, pull an all-nighter and just watch them all. But have you watched it, Spencer?
You told me to say nothing, so
Oh, yeah, okay. Well, you can say if you watched it or not. You can't
I'm
say
not
anything
sure.
about it.
I'm halfway through it's a two-part. The season's in 2 parts, and I'm halfway through the first.
I think we.
Is it good?
Yes.
It's always awesome.
Do you guys remember like the first episode?
Yes.
Do you guys remember?
I do.
Was it like really? Was it kind of like gory at like the first
A
episode?
little bit.
Wasn't there like a
It was
dead?
the spin halfway through because I didn't know what it was about. So it was like halfway through that episode, they had the big spin, like where you thought it was going to be about him and his cheating wife. And all of a sudden it's like, whoa, I did not see this coming. So
Yeah,
if you didn't know anything about it, and then you knew what that whole...
Didn't it start out with a dead body though, or something? Is
Well,
that
it's
the
about
show?
halfway in.
There's
a lot of dead bodies in those.
Yeah, because I remember Lisa and I looked at it, and I think there was like, there's like, I'm not watching this. There was, I think they were carving up a body or something. The first episode, no, whatever.
No.
Well, anyways, Asana is still making new lows in the move. I don't know how we got Ozark to Asana, but that's what we do here. That's a transition. So, Spencer, get us back on track here.
Get us back on track. All right. Well, what else was on my list here? For those of you watching Citrix, I don't know if it came out of the halt yet. I don't think it did. CTXS, no, it's still halted. This is a stock that had been rumored that there was going to be a takeover for a few weeks now, and that takeover is confirmed. So it's getting it's a couple of private equity firms. It's Vista Equity Partners and Evergreen Coast Capital, and the takeout price is $104 a share. But again, Citrix is halted, so it's not going to trade during the halt, obviously. So anyway, this is going off the board. Nothing to see here.
Remember, time value of money does matter a little bit more than it did a year ago, so just keep that in mind that it's unlikely to trade to 104. It's 102 in the pre-market before they put the halt in. It's probably where it wants to be, 101, 102. But again, you probably ring the register and you move on and try to find other places for your money.
What's going on with Kohl's? Any updates on
no
Kohl's?
deal yet. No deal yet. Still waiting.
No deal yet. No deal yet. And
Coming in a little bit. I would have rang
keep-
the register and got the hell out, but
no deal
that's
yet.
just me.
I also keep an eye on Activision. One, because they report this week, but two, because that stock for whatever. What's the price? 94 in Activision,
which is crazy. It's
at
79.
79 right now.
So, but they're saying it's not going to even close till 2023. So you got a full year of time value of money. And if you think about, I guess
95 is the price. 95 is the price.
$95. It's a 16-point discount. I mean, there's serious antitrust stuff here, obviously, or it would be trading.
I don't know if there is though. I don't know.
I don't get how you can stop it. I don't get it, to be honest. But I mean, the market is pricing in like that this deal may not happen. At a certain point, you just got to say, wow, risk reward is to be long it. I mean, there's 95, so you got 16 points of upside. If the deal falls apart, there's probably 14 or 15 points of downside here. So obviously from where it gapped. So you're kind of in the middle of like a coin flip, but I think it's better than a coin flip that the deal goes through. Yeah. So I'd almost be inclined to buy it here and just sit on it. Again, it's going to sit here and probably do a hell of a lot of nothing for a while, though. So I don't know if you need to come into it right away. Obviously, as we get more headlines happening, if there's antitrust issues, it's going to get hit. If it looks like there isn't, it's going to go up on that. But it's probably a stock that's going to do a hell of a lot of nothing for a long time.
Someone in the chat asked about BlackBerry and why it's down. Well, they did announce this morning that they're selling some legacy intellectual property patents. They're selling for $600 million is what they're receiving. And they're selling some patents that relate to, let me see, I'm reading from the 8K right now. They're selling their patents that relate to mobile devices, messaging, and wireless networking. So they're getting an infusion of capital here this morning, though I'm not sure why it would trade down off of that.
This is just a stock that obviously Reddit got a hold of it back in 2021, had the crazy move. It had the crazy move again in May when it went from like $8 to like 20 overnight. You got to sell in those wicked, stupid spikes. And now you're back here, $7. People are saying, well, it's going to spike to $15, $20 again. Never say never in this market, but this is just bag holder central all over the place. Path least resistance probably still lower.
Yeah,
does it bounce with
yeah.
the Cathy names bouncing and retail names bouncing? Maybe a bit, but it's hard to just envision a catalyst to kick this off to $15, $20 again.
You're taking out the recent lows of the move at 750, 720. So it's currently trading at 728. I'm just going to look at the pair of lows on Thursday and Friday, and if this right now, theoretically, it's resistance, right? Because you're trading below it. But if it can somehow, get this bid and hold 750. Then maybe they'll decide that it was a good thing that they were selling these assets and bringing some money in. But until you get over 750, I think.
What's their business? Like,
I don't
what
know.
is BlackBerry selling to make money? Just patents? What
Black-
is their business? What is their
BlackBerry's-
product?
BlackBerry's business is like
The phone.
No, it's
No.
not. It's not. It's the software.
They stopped making the phone.
One of the businesses is the software, like computers in cars, basically. That's one of their businesses.
That's what they're trying to get into.
Like the whole connected car thing. Yeah.
They had such a lead on Apple. They were the first. They were the smartphone. They were like everything. And Apple just destroyed them. So whatever business they get into, I feel like it's going to be the same thing. If they get into and start leading in something, that Apple's is going to come destroy them again. Great Canadian company for a long time. I hate talking bad about it, but they just completely got destroyed by Apple. And I just don't know, like in their next business, it doesn't happen again. It's hard to bet on this company.
Yeah. And you hear things every once in a while that they, do their association with Amazon one time or something, and it got to pop off that. But I agree. I mean, I'm sure they have declining revenues, and if they keep selling stuff, someone made a comment in the chat.
What do they have left?
What do they have left to sell?
People ask about Alibaba. The Chinese stocks are interesting here. Baba is interesting for the simple reason it bounced right where it should have. You got that triple bottom. We say there's no such thing as a triple bottom. Well, it's trying to prove the technicians wrong. 108.70, the low back in December, 110.38 in December, later in December, and then we just bounced the 110 area again, putting a tidy little double bottom in from the last 2 days. So you know what? Technically, it sets up okay. You've got a level to lean on. Again, if it takes out those lows, I wouldn't want any part of it. Baidu and JD bounced as well here on Friday. Every tech stock basically bounced on Friday.
Dennis, I'd be curious in your experience, because I mentioned the Chinese markets being closed this week because of the Chinese New Year. In your experience, how does that impact the trading of the Chinese stocks in the U.S.?
It doesn't.
It doesn't. Okay.
It doesn't really. I mean, the Babas and the Baidus always seem like they lead over here anyways. I know, obviously you got the Asia moves and they kind of all move together, but I don't think I think we got so much volatility here that Baba, Baidu, JD are going to get dragged around with whatever, the Qs are doing to a certain extent. So it's getting followed in the tech indices here. But, from a technical perspective, Baba still looks like it's still trying to hold support, which is good. But it's also, not gotten that far away from it. So, and every rally has failed, which is not good. So I'm kind of on Baba.
I mean, what if first of all, let's get a monthly candle, a green monthly candle, and then maybe another green monthly candle. And it looks like we got a ways to do that.
Momentum going.
Yeah. There's the Olympics are coming. When's their next earning report? Because Dennis,
Baba's this week, Wednesday.
Baba?
Oh, really?
Yeah, so I forgot about that. Thank you. Yeah, that's this week. I believe it's Wednesday.
Because didn't they have a halfway decent report and they slammed it anyways?
Yeah, so it's important. I mean, technically, you got the fundamentals now coming at you. So, I mean, you can't really trade this thing on charts when you're going to have this fundamental hit on Wednesday night, I believe. Is that confirmed, Spencer? Wednesday night?
I'm looking at the show real fast.
Maybe I'm wrong.
No, I don't know.
I have it written down that it's Wednesday night.
It is. I'm not seeing it for this week.
Maybe I'm wrong.
No, I'm not seeing it. No.
Okay, maybe I'm wrong on it.
Keep 118.
Earnings calendars are tough because you go multiple spots, And sometimes I know you guys call the companies.
I'm seeing. Oh, wait a minute. Oh, I'm in the wrong calendar. That's why
I thought it was.
I was looking
Wednesday.
at ratings. I was like, I don't see anything. Hold on. Alibaba is the 11th. Oh no, that's not confirmed though. So it's probably that means it's probably
Spinner's in there, and he's got Tuesday.
right.
So I mean, multiple.
Yeah.
When the hell do they report? Like, I don't know why people can't get this right. Like some companies, like you go out there and you look here, you look there. It's like the companies, don't they just tell you when they report? It's seriously, some of these earnings calendars just get them wrong. Usually Benzinga is solid because they call. But remember Jason Raznick had this, that he looked at another earnings calendar and the company's like, now, I know you guys usually call and verify it, or at least get it from the press releases.
Right, well, that's always where we get it from.
Yeah,
it's from the press release. But the problem is not every company announces it, especially with like foreign companies. Like if you're not in the U.S.,
this is the problem too.
It's kind of hard to call that. Yeah,
a lot of these non-U.S. companies just frankly don't announce.
We report when we want to report.
Yeah,
we report when the numbers look good.
Yeah, like I feel like Carnival just always decides to report.
Yeah, I was just thinking
whenever the hell they want to report.
So February 18th, the chat, then February 11th. Somebody's got Tuesday.
I'm pretty confident it's going to be sometime next week.
So it sounds like it's not on Wednesday, which I have written down. So anyway. I don't know where I got that from, but okay. It's right. I'm crossing it off.
Yeah.
If it reports Wednesday, I'm yelling at you.
Just keep it at. I'm not going to pick up the triple bottom, the low or anything. I'm just going to look at that close, that year-end close, 118.79. We've traded 10 points above it, 10 points below it. We're still below it for the month. So, if we can close in this area, right, or above that, you have a chance for a positive month in February. And, maybe you could still get one in January if it rallies today. So it's forming a bottom. Let's see what it does off the earnings. Spoos are bouncing nicely here, right back up. They're battling, man. I'll tell you right now, if this market does not take out the pre-market low at 43.95 and you're holding the 4,400 handle,
Joel's giving a prediction.
I'm making a prediction, and I'm just kind of bullish. If you guys were kind of bearish on Friday, and I was like, "Well, come on!"
I was dead wrong.
Yeah, and I'm just thinking it's just so sneaky. There's like $1 trillion worth of puts out there. I think I saw that tweeted out from Zero Head. So the whole world is leaning short with all their puts. The world's coming in, and we're going to have recession and runaway inflation, and why not rally the market when everyone's so bearish? But we're holding 4,400. I think that's a real good thing, at least now. We'll see what happens when the real liquidity comes in.
It kind of feels like the opposite, though. Like, obviously we had on Friday, we had the markets teetering on those lows, and it felt heavy. And then they turned around and ripped it. So it's like the opposite today. It's like we're up at the highs and we're trying to hold up. And are we going to take it out? Or are they going to pull the rug out from under it? I think it's a coin flip. I think it's 50-50.
Yeah, definitely.
That's how I'm predicting the market here right now. I'm not predicting any movement here today.
I'm just glad we're not up like a stupid 30 handles. One of those. We're just
really pull the rug out from under it?
Where you just have to sell. A stupid open like that. And we're not, down like 40, 50. I would have preferred us being down like 40, 50 handles to try, some lower risk longs, but that's the market. We're trading right around mid-range on the session here. But SPOOs, once again, is the slang name that I use for the S&P 500 futures contracts. It's not SPOO. It's SPUS because that represents the September contract.
It's where it actually came from. Like, everybody writes it SPOO. Where the hell did SPOO come from? Because you're right, Joel. SPOOs, SPU. Is a September contract, and that's where that nickname originated from, and everybody just took it to SPOO because it's probably people who just don't know where it came from, and they're like, "Oh, SPOO would be spelled SPOO." I don't get it. I honestly, I get yours too, like the SPU, but I don't know. Maybe there's another thing behind that.
Yeah, I don't know. Well, whatever. People ask about it. That just like to answer. And we saw another question I wanted to answer that we missed. So someone asked what a reverse split was.
It's when you get more of your stock and it's worth less money. That's
Pretty much
It's not usually a good
in
thing.
the short run.
That's
This
the thing.
segment sponsored by GE.
All right, it is 8:36 on a Monday. You guys know what it's time for. Market Structure Mondays with Tim Quast, the founder of Market Structure Edge. Tim, good morning. How was your weekend?
It was good. I'm in Amarillo live from a hotel room in Amarillo.
I knew that was a hotel room.
And,
I was going to make a
it's
guess. That wasn't the Tim decor, because
Yeah,
like
definitely not
pillow,
the Tim decor.
the pillow
It's the
matches.
curtain.
Yes,
It's
a
the
little
curtain.
staged.
They
If he lost
matches.
the curtain, he might have had us fooled. But that curtain is hotel-y.
And
for
the lamp.
sure.
Look at that lamp.
It looks like it was arranged by someone who would spell SPOO, S-P-O-O.
Do you know why
Yeah.
it's like why everybody says SPOO? Because I believe the origination was from the September contract of SPU. So where's SPOO come from?
We have the resident expert on that here in the proverbial room, don't we? It's Joel.
I know, but he says it's
has the answer to
SPU.
that.
I agree with him, SPU, because I think it came from the September contract. But the whole market spells it SPOO, and I'm just like, where did it go wrong? It's like hodl and hold. Is that where it came from? And SPOO came from SPU, but SPOO was cooler.
Whatever the case, SPOO would be a good name
knows.
for a thrash metal rock band. SPOO. That would it's not
That'd be a
yet
good
used.
name. That would be Joel's rock band.
Tim,
Yes.
I would love your thoughts on Friday afternoon, right? 2:30 comes around, and for the final half hour of the day, the market rallied. Do you have any insight you can share with us as to what was behind that rally?
Yes, I do, and I would refer to the market as a Gavrilo market. That's what we have right now. We have a Gavrilo stock market, and for those of you who are history buffs,
wait. Are you referring to Gavrilo Principe?
And there we go. Well done, sir.
Oh my
That's
gosh,
right.
Spencer!
Wait! I got a reference.
Jesus,
you did. Well,
I didn't know I needed a thesaurus and a history book during these interviews. I got the thesaurus out. But
that is, you need a baboom ching there that you can do, Spencer, because that is pretty good. That's some obscure knowledge that you possess. So for those of you who aren't as good at trivia as Spencer Israel is, Gavrilo Princip was the fellow who kicked off World War I. And no one knew that a nationalist, a Balkan nationalist, a Serbian, shooting the Archduke of Austria, Franz Ferdinand, which is the name of a rock band, by the way, would kick off this unbelievable years-long tumult. And I'm not saying that one little thing will necessarily be that cause, but it has been. It has been the worst October or worst month for the Nasdaq since October 2008, and worst for the market since March 2020. And one little thing did that. And so to bring it around to let's bring SPOOs and the rally on Friday and Gavrilo Princip all together. And here's what I think, the grand unified theory is that explains what happened Friday afternoon. So today there's a massive futures contract that is tied to the S&P 500 that expires. It's a monthly contract that the SIBO created in 2014. And they did this in response to the explosion of passive investment. And passive investors aren't investing to try to outperform the market. They want to be the market. They want to track it. And as those things got bigger and bigger, it became more complicated to try to buy and sell hundreds or even thousands of little fragments of stocks. So instead, there's this futures contract. Okay, so this leads into why Friday was a huge rally. So generally, there are large banks who supply those, and the banks will offset their liability. They're not front running a customer order. It's different than say, hey, go buy 500,000 shares of Apple for me. So a broker, it's against the law for the broker to put his order in ahead of that. But if Goldman Sachs supplies a futures contract to BlackRock to true up whatever index funds and exchange traded funds on the last day of the month, Now that bank can do whatever it wishes to mitigate its losses, such as buying a bunch of stuff and shorting it simultaneously on a Friday right before the contract expires. That can happen. And why would that occur? Well, you have to change your thinking about the market, traders. What is the motivation of a massive amount of money today? Well, if you're a bank, it's to not lose money. You want to either make money supplying services, helping investors transfer risk. That's how Lloyd Blankfein explained Goldman Sachs' business. He said, we are in the risk transfer business. We help people transfer their risk in this thing to that thing, and we collect a fee for doing that. Well, look at what happened over the trailing month. The NASDAQ dropped what? At the extreme level, it was almost 20%. It's down about 13% now, I believe. So we had massive destruction since that contract last reset on roughly, what was it? What was the last trading day of the year, Spencer? Was it the 31st? I can't remember.
It was the 31st.
Okay.
Yep.
Okay, so from the 31st of December to the 31st of January, crazy tumult involving futures contracts. The assassination of Franz Ferdinand occurred. And so that's why we had the massive surge on Friday as banks drove up assets and shorted them in the hopes that today everything comes out level. That's what's happening. And we can actually see this in the data. I can tell you that active investment has plunged. This is not the product of active investment. It was a week ago. Active money was selling. Now it is all what we call purple. It's all risk management. There's a 20-day increase in risk management across the whole market. I don't remember seeing that before. It's as big as I've ever seen. So if that all sorts out, and there is no Lehman Brothers behind the scenes, some bank that really took a shellacking during this month, then we're going to be okay. If not, we won't. But that's why. It wasn't rational behavior. It was risk mitigation.
So in theory, this could all just be routine market plumbing and when the month resets and the futures contracts reset, that's that. I mean,
yes, but the trouble is that the normal volatility in the S&P 500, what I'll say, ordinary course is about 1.8%. So intraday volatility is the amount of movement between intraday high and low prices on average in a component of the S&P 500. Well, over the last week, it is 4.1%. So we are colossally greater than the averages. And nobody hedges for that. No one prepares for a 4% intraday move. So yes, it is normal plumbing in the sense that every month this occurs, and the woe for indexes is volatility. You don't want tracking errors. And at 2%, you're in trouble. You need to keep it below 2%. Well, we're more than double that. And so that is abnormal. It is normal plumbing under abnormal, very unusual circumstances. Now, if you're confused about all of this, it's just one of the things that you have to think about, folks, that a major part of the market, this involves trillions of dollars, isn't deploying capital to invest. It is, how do I make sure that the stuff I own at this moment roughly reflects how the S&P 500 is performing? What if I had what if I was overweight Netflix? Because I was tracking the S&P 500, but I was growth biased, meaning I'm going to stack my money into growth instruments, and then it loses 40% of its value. My tracking errors are off the charts, and I'm going to have to get those square, or I'm in trouble. Well, I gave that responsibility to Citi, to Citigroup to handle. So what's Citi going to do? They're going to trade like freak shows to try to mitigate that. And that is what leads to some of these crazy moves that people think, well, what in the world is going on? That's what it is. And it's so large, it is so massive that it outstrips the underlying assets. The trading in derivatives on a notional basis is larger than the trading in stocks.
Is that always the case?
No, that is a phenomenon of just post-pandemic trading. Until prior to 2020.
When you say derivatives, really, really what you mean is options, or I mean, I can't
Options and
imagine.
futures.
I can't imagine the future. Yeah, but I can't imagine the futures market is that has grown that much.
Well, the part of the reason that it has exploded, we've absolutely set futures records in 2021, is
Okay.
because the trade size keeps getting smaller. Last week, the trade size in the S&P 500 was 99 shares. That's less than the minimum bid and offer under current rules. And so what happens is it's very difficult for any index to true up a position. It's very easy to transfer that risk to a futures contract so a bank can just do it. And so that has grown and grown and grown since the pandemic. The trade size has collapsed. It was, prior to March 2020, the trade size was close to 140 shares. So you'd say, well, 140 to 99 isn't that big a change. Well, it's 38% or so.
Yeah, it's big.
It's a massive change.
Is that retail driven? Is that just because there's so many newer customers that are trading 1 share and 2 shares? I mean, I see this all the time.
So.
It's annoying for me as a prop trader. It's like I get filled on 3 shares of something. I get filled on 5 shares of something, and I'm like, holy. And it's obviously, there's some smaller traders out there. It used to always be, I always thought it was like maybe some other traders that are just trying to figure out where the liquidity is too by throwing 1 share all around. But there's so many small shares. Got to be a lot of that average size got to be retail driven.
Absolutely it is. There's no question. And then the intermediaries are going to use that reality to make more money. I pay a little commission at Interactive Brokers, so I can see that. And I'll trade 20 shares of Netflix or Tesla, and my trade will be split into 4 or 5 pieces. And so one piece, I pay a tiny little, I pay a commission. Let's say it's $1. But then the other 3 trades, there's a penny commission. You say, well, that's no big deal. Well, it is if you're collecting an additional 3 pennies and you do that thousands of times a day. That's material. Right. And if you're a high frequency trader, the risk for a high frequency trader is that you're on the wrong side of the trade. So the smaller the trade size, the lower the risk for them. I'd rather intermediate 5 shares than 500 shares, because I don't have any risk. I can turn right around and sell the 5 shares to somebody else, particularly through a retail liquidity program, and get paid a fraction of 3 shares, 3 cents 100 on that. So all of that stuff, this stuff, Dennis. We're kind of in the weeds there, but this is why, to me, you have to know market structure, traders. You can't just wander around out there without knowing what's going on.
So as we wrap up here, Tim, there's a good question here from Pablo in the chat. He's wondering how the supply and the queue supply and demand is looking for this week right now.
Great question. Let's look at it. That's Pablo. You're thinking exactly right. You want to know what the supply demand in everything is. What's it in the S&P 500? What's it in the stocks that you're trading? What's it in the tech sector, cannabis stocks? You can always look at that. So let's have a look at it. And as bad as things have been, that it's there. I think one more step. Sorry, guys. We are. Haven't done this in a week. Okay, so moving away from my aging visage to this is Market Structure Edge. So traders, this is your sole tool to understand the supply and demand in the market. That's what those 2 graphs are. And so you got demand on the top, supply on the bottom. And in the ideal trading world, demand is rising and supply is falling, right? That's how you get higher prices. And you can look across here and go, well, they look like the opposite of that. Well, right, exactly. And Pablo, to your point, right at the top, broad market sentiment on a 10-point scale is 3.1. Let's click through that and have a look at it. So this is the SPY. SPY is, and we're not tracking intraday, that's just closing price. We do track it, but because we don't want to trade price. You will get beat trading price. Yes, you can get lucky, but remember, somebody is always faster than you. The high frequency traders are the Otto Boldens of the world. They're faster than everybody else, and they will always fool you. So don't get caught up in that. Understand supply and demand. Well, so here's the price, and this smoother line is demand, and it tends to be between the red line 6. You get above 6, and the probability of additional gains diminishes greatly from a mathematical standpoint. You get below 4, and the probability of gains begins to rise significantly. We are way below 4. This is the second worst The last time it was this bad was March 2020, which, by the way, was the worst we've ever recorded. We developed this measure in 2011, so we began tracking these data the same way, January 2012. And while this is very bad, this read right here is very bad. It's not even in the top 30 bottoms though. So we'd have to get all the way below 2. However, well, let me finish that thought. It's still falling. It's falling all over the market. Supply is still rising. That is why the market will struggle. When those two conditions stop, even if just demand goes down or supply goes down, a short volume in the S&P 500 right now, 48%, meaning it's almost parity between long shares and short shares. And looking at the data during options expirations, much more money shifted short than normal. So there's a whole lot of people who are short the market. They could be wrong. That can reverse very, very quickly. But Pablo, the answer is, if you looked at that, you'd say, would I buy that? No, right? No, I'm not buying. I'm not going to try to grab a falling knife. It could change in a day. We get through today. We're into a new month, new chance for hedge funds to make money over 23 days, the average trading days in a month. A whole new chance to take risk. New money coming in from 401ks unless everybody stopped. So you get past today and you're in this condition, there's a strong probability in the next week of a rally. But today, very, very challenging.
All right, Tim Quast, founder and CEO of Market Structure Edge. Link on the screen and in the description. Tim, always a pleasure. Have a great rest of your week.
Back at you.
All right.
I'll catch you from Colorado next time. We're on the road out of Amarillo.
Thanks, Tim.
We'll do some ticker time here. Drop your questions in the chat. I'm always, we always talk about, what moves stocks on this show. And when it comes to ratings and analyst ratings, typically they have an outsized influence on days when there's not much else going on, which is today. There's really not a lot going on this morning. And so you're getting a lot of moves off of ratings. I mentioned two of them. I mentioned Spotify. I mentioned Netflix and Tesla, but Spotify also has an upgrade from Citigroup. There's a lot of stocks.
Citigroup bullish some tech stocks.
Well, just those two. I think you have Kellogg's moving off a downgrade, VF Corp moving off a downgrade. There's a few others here that I had. Where was
I mean, we're so beat up on all these growthy names.
Beyond Meat, big upgrade from Barclays this morning. It's up like 5%. So
we're so beat up on all these growthy, retail-driven names that you get the Friday bounce, Joel, and like on a chart like Spotify, and I don't even see it. I mean, it's like, what a wicked rally on Friday, and you look at the chart of Spotify, and you're like, where is Friday's rally? I mean, you look at this and it's like it made new lows, and sure, closed $8 off the low, and it's up another $8 here. But man, oh man, there's just so much carnage in here that those 5-10% moves, they don't even show up on some of these charts. It's tough. You get these rallies, and they're way oversold.
You gotta zoom in, bro. You got to zoom in to see it.
Well, look at the top right chart, though. I'm just saying, and you've got to take a perspective. Like this is what too many people are so stuck in their tick charts and they're looking at the minutia. Take a look at what's happened here, and tell me there isn't just bag holders everywhere in this thing. So it's like, okay, well, what's going to turn this story around? Is it going to be that all of a sudden, we're getting the music from who? Did the music come off from? Neil Diamond, or who was it? I don't remember.
Neil Young.
Neil Young.
You know what, Dennis? You get half credit for that one. That wasn't so bad.
Oh, but anyway, so we rally. We're up here again. It's oversold. It's all oversold. So there could be some short squeezes, but it's going to be overhead supply. So it's tough. I mean, all these stocks, it's very random right now. We're all moving with the market. They pull the rug out. This will get hammered, but growth wanted to rally Friday. It's getting some follow through here today, but I'll still say guilty until proven innocent.
We'll see. But there's a lot I was going to bring in. There's a lot of controversy surrounding this stock, and not going to comment on that. But 179.83, that was Thursday's high. You're there. That's the second lowest high, down on the move. So if you hold 180 here, there's some upside to exact double top. Well, not exact, but a double top at 192.50. But first things first, SPOT holding 180. That was the area of Thursday's high.
All right, so a few people asking about Nightscope. Extremely difficult on a
jeez.
stock with 2 days of history here.
Yeah, I could-
KSCP. Dennis, I don't know if you saw this one.
No.
You probably didn't.
What's the stock symbol?
KSCP is your this stock, this company.
Well,
today,
it hit some of my my other scanners, but
so anyway, so here's the deal on this thing. They were doing a Reg A offering into the IPO. They IPO'd on Thursday. They opened at 14, end of the day below 6, and then on Friday went up to like 20, and then we got to 27 after hours. Now we're at 21. So it's just an absolute craziness. Impossible to say one way or the other. It's 2 days of history here.
go to the casino.
Yeah,
Bet on red or black.
Yeah, I mean,
I think in the long run, it goes back down. It seems like it all goes back down eventually, but who knows the path to get there? The stuff can just get silly. So
we covered this on Friday, and I just, my simple Eric Kroll, Kenny Glick, if it takes out the IPO high, that was 16 or 1548. Did that on Friday. You even had a chance to do it in the after hours too, because it came back in. So I'd use that target there of the pre-market high. Wow, that's way up there at 2741. But I would use, I would not want it to see it lose that high from the first day. That's at 1548.
You want to hear some stats? You want to hear some stats? 9 of last year's 10 largest IPOs in terms of size are underwater. 9 of the 10 largest IPOs. There's been firms are pulling IPOs left and right now. For good reason. It's not a good market.
What do they do?
Charm.
What do they do?
Nightscope?
Uh-huh.
I'll tell you what they do.
A telescope used at night?
They make
metaverse.
They make all no, but you're still gonna laugh. They make autonomous security robots.
Okay, you gotta have some of those buzzwords in there. So
they got
autonomous robots. Okay.
Well, they actually, in fairness to them, they actually have a product and they actually have revenue. They actually have revenue, which you can't say.
That's good too. That's good too. We like revenue. Revenue is a good thing.
It's not a concept. It's real.
Well, that's good news.
Yeah. Anyway, all
right,
I
know nothing about this company.
Does it accept Bitcoin? If it accepts Bitcoin, then
no. It's a security. It's the kind of robot that would call the police on Joel for parking where he's not supposed to park. You know what I mean?
Is this RoboCop?
Not quite. Not yet.
I watched the RoboCop. I know how that story ends. They can't shut it down. Shut it down.
Did that take place in Detroit?
You have 20 seconds to comply.
Okay.
You have 15
was it
seconds
RoboCop
to
in
comply.
Detroit?
Yes, it was.
Am I correct? Yeah.
Yes, it was.
Yeah.
All right, I'm definitely not buying it because I know how that he doesn't comply fast enough.
Okay, couple more here. Fine. We can look at coin.
Wow.
Joel Klatt is really mad. He wants to look at Coinbase. So we can look at Coinbase for you, Joel.
Coinbase.
Gosh,
I got a position in it. It's been bad. I put a little half-size position in this thing because I thought, oh yeah, get a little exposure here to some more crypto as a mistake. I'm bag holding Coinbase in my long-term account. Bag holder.
But you're confident as long as it doesn't take out 162.20. It hit that on Friday, 162.51. Yeah, you're $10 away, $16 away from that, Dennis. I don't know where the heck you bought it, but
I don't even know where the heck I bought it. Higher. Mistake.
Higher. I don't know. You got to look at the Bitcoin chart here. What's Bitcoin doing? Ooh, look at quiet. Very quiet. Woo. Let's see if
who's cheering the stock market crash in there.
I don't know if they're cheering. I don't know if they're cheering, but Lou wants to warn us that there's a stock market crash.
Yeah, you know what? That kind of activity is going to get you, Lou. Yep, you're deleted.
All right.
Well, I don't know. He wasn't talking to specific security. You can cheer on a stock market crash, can he? We don't like you cheerleading your stocks, and there like multiple times. You always mention your stock, but
anyway,
I guess the moderators got him.
That's me.
Oh,
the moderator.
Spencer got him. Mitch moderates. Mitch usually moderate the back.
Mitch is getting ready for our next show, which is live trading, which is going live right in a few minutes now. So that's a wrap for our show today. Please hit that like button. I appreciate the likes. We appreciate the likes. And check out PreMarketPrep.com. Check out pro.benzinga.com for a free 2-week trial. Oh, wait. I had to make an announcement today. I almost forgot. Okay, we had a few people reached out to me with regards to like there's this paywall. What's going on at Benzinga? You guys have a paywall now? Well, yes and no. Benzinga is instituting a paywall, but the pop-up that you all are getting is not to pay. It's just to create an account. It's just to create a literally like a user account on Benzinga.com. Once you do that, you'll be able to access our site as normal. The paywall we're instituting only comes into play after like 50 articles. So unless you're reading like a lot of articles, it's not going to affect you. But that's the situation. Those of you getting pop-up messages, just make an account. So make a free account. I should say that free account, and then you will have access to any web page on Benzinga.com until you've gotten to like that 50 article limit. So yeah, I almost forgot about that. So we had a few people comment. I hope that clears things up for everyone that was wondering. And then we're always available on YouTube. I should say that. So anyway, I'm gonna hop. Dennis is gonna hop. We got live trading with Benzinga starting at 9:05. So stay tuned for that. We're going to redirect the show to that show so you don't have to do anything. And please remember that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Thanks to our guest, Tim Quast. Check out the links in the chat to marketstructureedge.com. And catch you guys later. Have a good rest of your day. Stay green. Good luck at the Open.